Welcome to Listen to the Market for Monday, February 20th. In this episode, I'm going to walk you through one campaign on Monday that will show you how, by using a bit of street smarts and I guess common sense, splitting the stop losses allows you to capitalize more on a movement and also where and how to add to a winning position. Again, courtesy of the market itself. So coming into Monday, the first thing that I've done, as per normal, is mark Friday's high in the charts. Friday's low is way off the screen. Friday's message for Monday was quite simply, expect a larger range. There was no clue as to whether it should be an up day or a down day. So coming into Monday morning, it's always a little bit messy on Monday morning because 9/10 of the world is asleep. New Zealand and Australia start trading. But the spreads go really wide rather than wild. 8 pip spreads, 9 pip spreads, 6 pip spreads, so it's not worthwhile getting involved until the rest of the world wakes up. What we saw on Monday was a little RTV sell-in through there on the hourly. Small loss if taken at all on the hourly chart, but the nice one to start the day off was really a 3D setup there, as well as an RT with a sell timing tool 2 hours before the idealized window, which enables one to switch to a 30-minute view instead of using just a 60-minute chart, acting on the 30 on the break of that low ISL up there, simply trailing it down, produced just on a 1 hour return. Then, almost as if someone had read the script or attended the L.I.V.E program, setup comes along in the idealized time window on the 60-minute, being a 3D setup as well as a variation of a fake out buy setup, reinforced by confluence on the 30-minute with a pivot point buy timing tool, one of the 5 buy timing tools in the arsenal, and nicely coincidentally in the 15-minute view there was an RTV surrogate as well as a small bar here with a range of just under 10 pips. So formally the entry would be at that high, ISL at that low. Let's see what progressed. Entry bar was rather spectacular, promise of higher highs to come. A trail could go into place, or even a break even at this stage, making it a totally risk-free environment. Next bar sees higher highs, higher lows. Let's see what the 30-minute view presented. Well, clearly the 30-minute view presented a promise of higher highs to come. So perhaps rather than trailing the stop on the entire position, leave part of it at break even, trail the rest of it. Next bar comes along. Nice, trail it some more. Higher highs, promise of higher highs yet again on the 15. By now the 30-minute is finished. That's the view on the 30, and the view on the 60 presents yet another promise of higher highs to come. So now the CT, the coattails rule set comes into play, looking avidly to add to the long position. No buy setup in there, no buy setup in there, nothing to do in terms of adding to the position. Okay, been stopped out, break even is still in play. Next bar comes along, completes one 30-minute bar. The 30-minute bar presents an active RTV of the lows. This 30-minute bar also means that one uses the M rule set. And the M rule set allows you to go long in through there with the trail with an initial stop loss down through there. Market then rallies some more. Next half hour bar is finished, as is the next hour bar finished. So there we have it. Currently long, second time round, break even. We can go to a trail on the 30, we can go to a trail on the 60. Following the 60 on the way through, promise of higher highs, again looking to add to that position. 2 30-minute bars, no opportunity to add to that position. 4 15-minute bars, 2, 3, 4, no opportunity to add to that position. So simply the trail is right up there on the 15, right up there on the 30, or right down there on the 60. Next hour comes along, and for the first time in its rally, we fail to make higher highs. That has to be a warning sign to turn the microscope back up again and manage this long position more closely. Either the 30, and getting stopped out through there, 15 likewise, getting stopped out through there, or the hourly in through there. Next bar comes along on the hourly with a fake out sell. By now it's past the bewitching hour. Thank you very much. And what we've seen is a small campaign down there. Why not? No great shakes. We've seen a nice extended campaign in through there, providing the initial entry in through there and going to break even on the period of entry, getting stopped out of part of the position there, re-entering. So now we've loaded up through there, and the overall return for the day was well and truly above 7R. What I'm gradually doing is introducing more aspects of the L.I.V.E approach, so that way you can appreciate how thoroughly its rule set covers whatever the market may throw up. By having a rule set, you simply look at your rules and go, this is what the market has done, this is what I need to do. So it's a nice laid-back way of acting rather than reacting to market movements. That's it for Monday's report. Catch you Tuesday. Bye for now.